Hello everyone, welcome to Just Invest Today, and today we're talking about Alibaba, JD.com, Tencent, all these stocks because they just came out in the media. CNBC said don't trust the bounce in Chinese stocks such as Alibaba, Baidu, traders warn. As we can see, look what Alibaba has been doing, man. It's been going crazy, man, since October 4th, 139. What is it, 20%, 27% gain, which is really huge so far because that's a short-term bounce in like probably less than 30 days, man. And let's see what JD.com has done. 69 at its peak, it had 23%, but at around 20% gain already. So they're making a nice comeback, the Chinese stocks. But here are two people on the web, on the CNBC program, is saying do not invest in Chinese stocks because there's so much risk, there's so much uncertainty around these companies, and just get out because that's a short-term bounce. But in my opinion, this is my opinion, do what you want, but man, let's be real, I have 50% of my net worth or my stocks in Chinese companies. But the thing is, my one company, PDD, that's a short-term sell for me. When it gets to like 100, like wherever it gets, I still think it's like $160 stock, $200 stock. So I ain't care. I'm waiting for that price to hit, and then I'm probably gonna sell out because that's what I believe the stock is worth. Cause think about it, I'm gonna sell that in the future because I feel like they have a huge network, a lot, like they're undervalued, but they have a lot of issues coming about because they have competition from JD.com and Alibaba getting into their field of like the lower tier cities. And remember, PDD can't use the same strategies that they were using before because the government is like kind of hammering down on stuff like that, using subsidies, trying to get like your products lower so you're losing money just to gain market share. They're gonna kind of stop doing that. So I kind of don't want that risk just in case. So yes, I'm selling out PDD when it gets to a little bit of a higher price because I still believe it's undervalued in the short term. But other than that, they came out and basically saying that there's a lot of risk on these stocks like Alibaba, like JD.com, like Tencent, because first, the Chinese economy is slowing down. Like, what does that even mean? Like, think about it. Like, the whole pandemic, every economy is slowing down. It's not just China. Like USA, Europe, Canada, everyone is slowing down. So you can't just say just China. So don't like avoid them because China's economy is slowing down. That's one of the reasons. And I think that's just crazy. The next reason is regulation. So we understand the whole regulation and what happened with Alibaba, how it took 50% loss. But now regulation is more clear for China. Like, they set their boundaries, they set all the tone already for what they want. They want common prosperity. They want things to go in this certain direction. And remember, USA, Canada does the same thing when it comes to regulation and anti-monopoly stuff. But the thing is, the process is slower. It's so much slower when it comes to like countries here. But in China, they can just hammer down quickly. So that's why stocks drop so quick in China, because they can just hammer down. You remember what happened with the education sector? They just killed the whole education sector, probably for a good reason. But anyways, people didn't like that because it was just too quick. So now they're worried about other stocks happening the same fate. So that's a huge risk. You still got to keep in mind. But I feel like that risk has kind of been handled. But they're still out of it, which makes perfect sense. You can do what you want. They're saying just to have a small portion of your portfolio, very speculative play in mind. So they're saying only 5%. And that's crazy because I'm going the opposite. You make big returns when stuff falls and people have a lot of fear, people are leaving the market. That's when you make your money, man. Like, you're not going to make your money when everything's calm, everything's collective, blah, blah, blah. So, and you have to understand what the risk tolerance is, your risk tolerance, and where you are in life. So just don't do what I say. But that's how I'm treating it. That's what I'm seeing. So they're saying that this is just a bad bounce. It's an overreaction. It's going to pretty much fall again because people are going to do this a short-term play, take their profits. But I don't believe that. I don't believe that's happening. But here they list two main factors on why they just can't trust China. They're saying the foreseeable growth in China, they don't understand it, or the e-commerce growth. I'm like, what? E-commerce is growing way faster than like any place in China. There's so many people going to the middle class that it's gonna be crazy compared to the USA, Canada, Europe. Like it's not even comparable. So for them to see the foreseeable future growth is a perceived risk, that is that is just crazy. They're saying it's going to decrease because the GDP is decreasing or whatever, but GDP always goes up and down. To see any country, GDP goes up and down. So that's just dumb from what they're saying. The Evergrande crisis, that's another risk they said. But boom, the Evergrande crisis, they're paying off their debt. The Chinese actually have, the government actually doesn't want the bonds to actually collapse. They're not going to risk default because the Chinese government stepping in and helping Evergrande because they understand that the bond market is supportive of the Chinese economy. So they're not just going to make it default and become one of these huge situations, in my opinion. But who knows? They pay their first interest payment off, so that's probably setting a precedent for the next future bond payments. So I don't think it's a huge risk. And even if it was a risk, I don't think it's going to crash the whole Chinese economy. And if it does, who cares? A better buying opportunity. That's not going to affect Alibaba, JD.com. How's it going to affect those specific companies? It won't. So even if that was a huge risk for that company, for Evergrande, it doesn't really matter because it's not going to affect those companies specifically. People are still going to buy e-commerce products from Alibaba, from PDD, from JD.com. So whatever. Power shortages. Really? Like, that's going to affect Alibaba? Like, how long is that gonna last? Like, is that gonna last for 2 years? Like, remember, these are long-term plays. So, power outages, Evergrande crisis, those are all short-term issues that I don't see affecting the business of Alibaba, which is what I'm talking about. The fundamental business of Alibaba, of JD.com, of PDD. That's not a risk. So, what they're saying in this, I don't believe. Right? And then they're just saying that the growth overall for the Chinese economy, what Alibaba has done, and they show this chart from 300 all the way to like 170, and they're saying that's all fake, all a fake bounce cat, and don't invest in Chinese companies because there's so much perceived risk in the market and you don't know what the government is going to do to these companies. So that's their stance on CNBC. So what's your take on this? Do you have a huge position, a small position? Are you worried about China and what they're going to do if get more regulation on these companies? Like, what is your position on China, man? Like this video, comment, subscribe to my channel, and I'll get back to you in the next video. Peace!